audiences are here with us at YouTube. I do see the YouTube crowd with us. Welcome to the stream, guys. And I see we are live on X now. Just going to put out a tweet to get all our followers um, locked in. Big week, Tim. Where do we start? What's there's no shortage of news in Bitcoin Treasuries this week. Strategies, Strive doing, huge things. We've got the Clarity Act. We have Kevin Warsh passing Senate confirmation, which is bullish for Bitcoin and the surrounding ecosystem. I'll give you the first word. What's on your mind today?
I think what we're seeing here is the an industry with best practices coming to the forefront. A clean balance sheet, no debt, high speed, low drag, all of the things that are buzzwords. But when it comes to capital markets, and we're entering this new era of, yes, the person with the most Bitcoin maybe wins, but also we're working together, but it's also go time for we're in this accumulation phase, but what's next? And I think we're starting to see that. Huge congratulations to the Strive team, just ringing the bell right now at Nasdaq, and Saylor this morning announcing the he's retiring $1.5 billion of convertible debt. So it's just this is just the beginning, and I'm very excited to see where all of this goes. Arguably or inarguably, it's probably the better word, no one has taken more criticism, a lot of it unjustified, than Michael Saylor. And the reality is Bitcoin doesn't need anyone. So you think about Wall Street, if they can, you know, give you a product and charge a fee, then they're making money. But think about MSTR. Think about these Bitcoin treasury companies. They're not charging you a fee. So I'll just let that sink in and hand it back over to you.
Yeah, wild stuff. And it is like kind of surreal to realize this is just kind of the tip of the iceberg. The addressable markets that are opening up to Bitcoin and Bitcoin treasury companies. It's going to blow our minds what can happen, and how we get there is part of the fun part of the ride. And it was just a week ago when Jeff Walton from Strive was talking with CoffeeZilla, and his kind of take was that we're at the end of the S curve, but you know. Uh, Bitcoin's 18 years old, right? We're just in the early innings, and seeing how it's been, kind of captivating the mind of people in the Bitcoin space, people in the Bitcoin treasury space, and now it's seeping into so many parts of traditional finance, and just seeing how it's starting to capture some of that fixed income um, money that we've talked about in Bitcoin for years. And we knew we'd get here, and Sailors kind of pioneered the way, and seeing a team like Strive, Matt Cole's team over there, it's just gigabullish signal to see them ringing the bell at Nasdaq. It was a month ago. Sailor and Fong were talking about how they were going to be the first company to pay twice monthly dividends, and they had looked at going, weekly with dividends, daily, but there were restrictions that Nasdaq had in place. But Strive is like, hold my beer. We're gonna move fast and break things, and they're just light speeding into this daily dividend. So let's break that down a little for the audience. I think probably everybody watching probably has heard about it, but it bears repeating. You know, they're going to be paid daily dividends over 250 times in the course of the year on business days. Um, that monthly 13% dividend that's currently on their SATA digital credit product will be set every month, just like it always has. But there's a record date every business day, so they'll be able to stream those dividends. What's bullish about that for you, Tim? And what do you think this unlocks for investors?
So in a lot of capital markets, things happen on a quarterly basis, and that's been for basically the entire history of Wall Street, let's say. So the news cycle is going to, like, not only is Bitcoin going to accelerate, the news cycle is going to accelerate when you have the record date every single business day. I think it's a huge unlock. yes, for the capital side of it, but also for the attention side of it. We may get into at some point talking about, the digital credit and then the digital money on top of it. I think that would be very bullish for a lot of the quote unquote crypto news cycle of the next couple years to be things doing really well and things blowing up that are built on top of digital credit. And I think it's really it's kind of funny to me that all this is so early that some people think it's kind of memey, and it's this new technology along with social media, along with public capital markets, and you, you really see the entire rainbow of suits all the way to guys that might be in suits, but they're saying what some people think to be ridiculous things. So there's no shortage of entertainment, but um, I think the education piece cannot be understated. For everyone on social media saying that Bitcoin's not doing anything, it's chopping sideways. You can have as many conferences as you want. Bitcoin's not doing anything. And I think there's a lot of people that are hitting the roads, dealing with travel, making a decision to take time away from their hobbies, their families, their other obligations to go and literally travel around the world to meet other Bitcoiners, other Bitcoin Treasury executives, and really be at the forefront of all of this. And so I could not be more excited. Um, yeah, I mean, it's when I keep tweeting that Bitcoin Treasuries is going global, it's going to be a big week. Well, this week is a big week, Tyler.
Yeah, this is yeah. I think this is going to be one we remember for for a little bit, but maybe it is dwarfed in the coming years, Tim. It is really cool to see these guys. You've rubbed shoulders with them for years now, and you know, they are the pioneers at these Bitcoin treasury companies who are laying the framework for what's to come because there is going to be a race into Bitcoin. There is going to be a race to collateralizing balance sheets with Bitcoin, structured products, other interesting products that we probably haven't even thought about yet that can be delivered. When you have an asset that is scarce like Bitcoin and that is, digital money that is just so well put together and kind of a counteracting force against you know governments that are spending trillions and trillions of dollars deficit spending every year that's ever increasing in a fiat world, and being able to collateralize your balance sheet, being able to collateralize products with Bitcoin. It's just there's going to be so many new and innovating things. I'm excited to see what the current Bitcoin treasury company do in the future. I'm excited to see the new players who come into the space with new ideas, both from a traditional finance background and people, from a Bitcoin native background who are going to have some interesting value props for all of capital markets. Um, this was a huge week for STRC, and I think it was earlier this week. I was like, oh, this will probably be a little bit more tempered compared to the last couple months. I think I'm like, oh, I don't think we're gonna repeat that again this month, but we sure did. Um, Stretch just this week raised $2 billion in 4 trading days before their ex-dividend date. Um, we had Apex announce they're the DeFi protocol that has a stable coin, essentially a yield coin backed by Stretch that's collateralizing that, and they're offering a return. And they also have some SATA exposure. Um, but they've bought $280 million plus of STRC, and I remember bumping into them at Strategy World when they were just getting started. And I was like, oh, that's a cool little project. And to see how that's exploded, they're sponsoring the stream as well, and just seeing how quickly that product has scaled in a we're still what 35% off, 40% off all-time highs in Bitcoin. We've got the Clarity Act that's passage is going to come through, so there's only going to be more dollars flowing into the stablecoin ecosystem and people looking for yield, especially with the Clarity Act not allowing US based stablecoins to offer yield. So if people are in that ecosystem, I think Stretch and products that are collateralizing it are going to be very attractive. Sailor tipped us off to this, but I'm still shocked at how Stretch has performed. Has it surprised you, Tim?
Yes and no. The mechanics of it are such that um, the sheer dollar amount surprised me. The fact that it works doesn't surprise me, I guess, is the simple way to put it. Um, yeah, and on the advisory side of some of the conversations that I'm having, people are looking, whether they'll actually, execute on it or not, I don't know, but, there are companies looking to raise 10, 50, $100 million and get into the market or get more into the market. And I mention that just because, if it's just one guy out there acting crazy, dancing, they're like, all right, well, I hope that works out for that guy. But at the point that there's so much conversation with dozens and then hundreds and soon to be thousands of these Bitcoin treasury companies, I think it's just a very it lends credibility to the space. I don't think we necessarily need to wait for Apple or Google to put Bitcoin on their balance sheet. It's more of a if when like literally everybody's talking about it, and the taxi driver, the Uber driver is talking to you about Strive, and you're like, okay, either this is the top or I need to look more into this. And the more that goes on, the more um, attention, awareness, and ultimately, hopefully, education kind of emanates from the space.
Yeah, yeah, really well said. I want to bring up Strategy's debt metrics here. Just taking a look. Can you see that on your screen here, Tim?
Mhm.
Yeah, so as you mentioned, Strategy is retiring 1.5 billion from these 2029 converts. That's going to leave under $7 billion in convertible notes left of debt on their balance sheet, and that's how they're. We estimated that they were able to basically turn on the ATM on Stretch for a little over $2 billion this week. So I think the Bitcoin buy is probably going to be in the 6,000 to 10,000 range, depending how much Strategy raised on the MSTR Common this week. But being able to retire that debt, 3.5 years ahead of time is something I didn't really have on my radar. And this is just a week and a half after Saylor has said, "Oh yeah, we're going to consider selling some Bitcoin, in defense of MNAV." Obviously, they're still the goal is to acquire more Bitcoin per share and more nominal Bitcoin on the balance sheet. But they just added another weapon to their toolkit by being able to say, hey, we can sell some Bitcoin to fund dividends, to harvest a tax loss and all that. But Saylor and Fong had previously said, oh, the converts, that's something we'll have a discussion about 6 to 12 months ahead of time. But to see them retire it early is really interesting. $1.5 billion of that in a week where Strive, who is really innovating in this space so much, retired the rest of their debt. So Strive has a completely pristine balance sheet with the only obligation on it is the dividends on SATA. How important do you think this is going to be um, for Bitcoin treasury companies by and large, wiping their balance sheet clean of debt? Certainly the debt is a risk, and the dilution overhang is something that weighs on the mind of investors. But it's been really interesting to see how quickly both Strive and Strategy seem to be with their aggression in retiring debt now.
Yeah, I mean, getting rid of all of the debt allows you to pump up your amplification ratio. And, I don't want to get into moon math here, and I also don't do public math, right? I made that decision a few days ago. But when you start running the numbers on Bitcoin reaching new all-time highs and how the numbers and mechanics actually work between the common equity and the preferred shares, and how de-amplified these guys are going to get in very short order, and how much room they have to run, it's pretty incredible. And I don't know, just to myself when I'm sitting alone, I think all of the OGs can only sell once, right? If they sell all their Bitcoin, they can only do it once.
That's right.
So there's going to be this inflection point where, you know, it's a liquid market. There's always buyers and sellers, but I think as more awareness and education and corporate and institutional hodlers are in the market, um, the more interesting it's going to get. I'll leave it at that.
Yeah, I think it's going to be very interesting. And like you said, as Bitcoin price runs, strategy's been strategy's been Michael Saylor's been accumulating Bitcoin like a drunken sailor. I'll say it, this year. And when Bitcoin's price runs, you're right. There's going to be so much room to add amplification, and we don't have to dig into the numbers per se. But do you think either of those teams that have the digital credit products do run the risk of being too aggressive with increasing their amplification in a Bitcoin bull market? Does it matter at this point? Can amplification run to 100% of the balance sheet? What's realistic there, Tim?
I think we're in a new paradigm now where, in my view, they almost can't be too aggressive because think about it. Let's say you take your amplification up to 100% and then Bitcoin has a drawdown. You can sell your high basis Bitcoin and it's actually an advantage in the same way that strategy and others have used the return of capital, rock dividend. They've like taken a bunch of lemons and you just make lemonade. And then you take a bunch more lemons, you make lemonade. I mean, I think that's really what's impressive is the creativity. I know we have all of our AI agents helping us out, but at the end of the day, right? You can't borrow conviction, as Ben Workman says. You can't let AI do the thinking for you. Although if it's helpful, that's great, right? Let's get all the information in front of us and make the best decisions we can make. But I mean, I think we're like the sun came up this morning and it's a new day when you really just sit and think about, okay, what if you go to 200% or 210% amplification and then you have a little bit of a drawdown? You just sell your high basis Bitcoin. It's actually a tax benefit. Like, I think this could get super interesting. Um, and yeah, to the extent that I can even wrap my mind around all these different levers, it is financial engineering. And I think that's a really positive thing. Um, I think some of the companies that have operating businesses that do throw off cash flow is great. But I think, getting, let's say, half a dozen more companies in the market with a publicly traded preferred product um, is really going to take it up an octave, as Saylor would say.
Yeah, I agree. It's going to be really interesting to see, and I don't want to throw out predictions on what'll happen because I'm always wrong on on exactly how it plays out. But I think you're right. Like if Bitcoin does what we think it can do, the sky kind of is the limit here, and I think it will be interesting as more companies enter the fray with some digital credit products, which is certainly bound to happen. There's going to be experimentation, and we're going to see, I think, people go out on the risk curve all the way. There's going to be some people going all the way out there, and maybe it'll work out, maybe it won't. But it's that's a free market. Is we're going to get a lot of the strategies that can unfold will head out there. I want to bring up here STRC's chart. Just today, it did drop almost that full dollar today, which is healthy to see. But I think the big news, and I'll pull up the chart here on SETA, is when they announced just yesterday. Things move so fast. Was it yesterday, Tim? They announced the daily dividends,
Yeah.
and they it briefly hit par. Which just showed the sentiment was really bullish on this announcement. And the last couple months, it's taken a little bit longer for SETA to hit par because, of course, their ex-dividend day is at the end of the month. So we've got another 2 full calendar weeks before they're at par, but they hit par early. They hit par on the same day STRC the day before their ex-dividend date. So we had briefly both digital credit offerings trading at par, which I think is extremely bullish on digital credit. I think the demand there is incredible. I think um, I do think someone else was talking about this on stream yesterday. It might have been Soleil with Jeff and Dan Hillary, um, but he was saying that something that I talked with the guys on the One Share podcast that the move to daily dividends may um, take out some of those arbitrage dollars that would have ordinarily come in this summer on SETA as people trade around the ex-dividend date. So on the short term, it could take out some of those dollars that would have otherwise come to SETA. But I think long term, it's just so bullish because uh, who doesn't want daily dividends? Who doesn't want to, park money that they've got sitting there being non-productive when they could park it maybe in a 2%, 3% yielding account, a money market overnight. If you can just throw it in SETA with low volatility, that's what a great product. I think the sky's the limit. I was on another podcast yesterday talking about this is nothing that's around the corner, but a decade maybe plus down the road, I could see as banks white label SETA, as they white label STRC, if they're at a large enough market size, um, you could almost see like brokerages offering sweep accounts based on these products. If Stretch really becomes $1 trillion product, why wouldn't banks sweep customer funds there overnight, pay them out at a high yield, capture a massive spread on that compared to what they capture on money markets and treasuries today? Are there any other interesting things that come to mind with how um, daily dividends could change the game?
Yeah, just listening to you talk about the daily part of it, I think when you think about how everything's going digital and everything's based on attention and speed, you have, you know, some percentage of people are going to be more thoughtful about, oh, I have this cash. How fast can I get it into SETA?
Mhm.
Because I could be earning money today and tomorrow, or I could just not do it. Right? It's like, well, might be rescheduling that coffee meeting because I got some work to do here at my desk. I got to get some cash into SETA. Um, I mean, it's like not free money, but compared to, you know, a traditional bank account, it literally kind of feels like free money. So I just think you think about that 13% number and you think about traditional private equity. You can just look it up on Claude or Chat or your favorite, little helper. And it's like those are maybe giving you 15 to 20% returns, kind of similar to private credit. Like it's quarterly, it's opaque, it's all these things. And that's part of my background, right? So I'm also throwing myself under the bus there a little bit. But, just looking at the world for what it is, and you now have this novel thing where I know Jeff Walton has said, it's too good to be true. If he was at Risk World and he was saying he was paying 8%, he would have had more interest, maybe. So I think there's a giant education curve. Um, and to your point about Apex, you see the more of the DeFi um, players out in front. Maybe you'll see traditional finance catch up once the Clarity Act passes and everyone kind of realizes that we're again in this brave new world where we actually have clarity around what's a commodity, what's a security, what are the rules of the road. And then, I mean, it wouldn't shock me if, today, tomorrow, next week, you see some product that's streaming hourly, streaming, minute by minute, second by second, millisecond by millisecond, because you can do all of that when everything's digital.
Mhm.
Um, will it be on some decentralized protocol that you're not sure about? Maybe at first, but I think the rate of development in this market is just starting to accelerate. And I talked to Eric Semler yesterday. He couldn't be more excited. He said he's a very happy board member at Strive. So, um, Yeah. I mean, you look at the team at Strategies, you look at the team at Strive, you look at the team at Metaplanet, just to name a few.
Hmm.
And these guys are not stopping. When you see them post pictures, I think Dylan LeClaire posted a picture a week or two ago, and they're like out doing meetings. They're out traveling the world, educating people on what they're doing, and um, that's the hard work that someone just in their basement behind a computer is not maybe fully appreciating. Is that it's taking these conversations about Bitcoin, about capital markets, about clean balance sheets, about really pushing the transfer agents and NASDAQ and the attorneys and to the limit. And it's not easy. If it was easy, Tyler, everybody would be doing it. And everyone's not a Bitcoin treasury company yet, but everyone is an internet company. So
Mm.
it's just a matter of time.
Yeah. Oh man, you got me. I got goosebumps, Tim. Just talking about this stuff. It is really transformational, and it's kind of like I said, like I alluded to earlier. It's this payoff that's kind of been promised in Bitcoin in the way that the digitization of money can really change things, and just seeing what's possible. Thinking about even more frequency than daily dividends is just crazy, but it's something that is inevitable in a digital world backed by digital capital and digital money. Yeah, giga bullish. Thanks for joining me today, Tim, on the stream. It's really exciting times, and I've got to go get to my brokerage account and sweep every last dollar I have into STRC or say it. Not financial advice, but yeah, I can't have idle cash sitting there, Tim. But thank you so much for your time today. Let everyone know where they can follow you online.
Yeah, thanks for having me. You can follow me at Tim Kotzman on X. And yeah, let's do this again soon. This was super fun. Thanks for having me.
Sounds great, Tim. Take care. Stay orange, everybody.